So, welcome back to everyone. I would now like to move on to our next panel discussion, the theme for which is Changing Consumer Behavior Post the Pandemic Opportunities for Fintech. For the same, I would like to first introduce to you our moderator for the session, Mr. Puneet Chandok, President India and South Asia, Amazon Internet Services. We welcome you, Mr. Chandok. I would also like to introduce to you our panelists for the session. First up is Mr. Tasneem Padiyat, Head of Digital Accounts and Fintech Visa. Mr. Varun Dua, Chief Executive Officer, ACO General Insurance. Mr. Joel Yarberg, Vice President, Asia Pacific Rapid. And Ms. Lizzie Chapman, Co-founder and CEO, Zest Money. Thank you so much, panelists, for being here today. I would now request Mr. Chandok to please take over the session. Thank you.
Good evening, folks, and a very, very warm welcome to what I'm confident will be the most interesting 40 minutes at the Global FinTech Festival this year. Believe me, we'll make it exciting and fun for all of you. And I'm speaking on behalf of Tasneem, Lizzie, Joel, Varun. We're all absolutely thrilled to be with you today. Let me introduce the topic, share some initial thoughts just from my vantage point, and I will then pull in our panelists and we'll have an interesting discussion. And then towards the end, we'll open it up for Q&A, and if you have any comments or questions, we'd love to take them on. So let me just start with the topic. And the topic today is changing consumer behavior post the pandemic and the opportunities it creates for fintech. And to bring this to life and make it more real, I'm going to break this into three themes, and then we will anchor the discussion across those three themes. The first is, what are the big shifts that we're really seeing in consumer behavior driven by the pandemic, right? And while it might be convenient and almost exciting to assume these changes will stick, we'd want to have a real conversation around which ones of these changes in consumer behavior will be really permanent versus temporary. So that's theme one. Theme two is how is the fintech ecosystem responding to the challenge of the crisis, right? And how are fintechs pivoting on business models, leveraging tech and cloud differently, thinking about analytics, AI, ML, and new technologies to actually get to their customers in different ways and serve them even better, right? So that's theme number two. And then the third theme is where I'd love the panel to do a little bit of crystal ball gazing with me, and we'll all talk a little bit about how do you really reimagine the future of fintech? What are the opportunities that are coming our way, and how do we really kind of prepare for the post-COVID world, if you will? And then finally, time permitting, towards the end, I'm going to push the panelists a little bit, and I'd love to probe them a little bit on their own personal learnings as we all trying to make sense of this new world. And I genuinely believe this is the biggest collective learning moment for all of us in decades, and I don't want to miss the opportunity and learn from them. So let me just share some opening thoughts, especially around consumer behavior and change, and then I'll bring the panelists in. And I'm speaking from a vantage point of AWS, and it's truly a privilege to be leading AWS at this time in this part of the world, because you get to partner with startups and digital businesses, enterprises, small and medium businesses, a large set of developers, which gives you a bit of a perspective on how consumer behavior is changing and also how businesses are really responding, right? So from a consumer behavior perspective, there are 2 or 3 trends that I'm really curious about, and I just want to tee those off before we get thoughts from others. I think the first one is the most obvious or most well-known or well-discussed one, right? Which is the flight to digital or flight to online or flight to omni-channel. Almost saying cash is dead, and we will have that debate in a bit. But if you just look at the India perspective, right, and depending on the category you pick food and grocery to apparel to household to entertainment, we're seeing an uptick of anywhere from 10 to 15% in 10 to 50% in terms of online customer base across these categories, right? And while some of these habits are workarounds during the crisis, a lot of these will stick. So that's the first one, which is the flight to digital, if you will. The other one, which is equally interesting, is what I call a shift to value or shift to essentials. And this is a topic that's been debated widely for the past few months as we've gone through this, right? There's a camp which has been saying that as we come out of this crisis and as economies open up, customers will be a lot more frugal in terms of their spending. And there's a camp which has been saying, no, customers will come out and be almost hedonistic, if you will. And there'll be a bit of pent-up demand and there'll be revenge shopping, right? So you've got these 2 schools of thought. And we'll talk a little bit about this, right? But at least what I'm seeing on the ground is a lot more consumers being a lot more mindful in terms of where they're spending their money, right? And again, as you see, longer periods of uncertainty around economic revival, around earnings and income, are being a lot more mindful in terms of where they spend their money and almost trading down towards lesser expensive products, right? And there's a really interesting McKinsey report recently which came out which said 61% of shoppers in India will be more mindful in terms of what they buy and where they buy it from, right? So that's the second trend, which is shift to value and essentials. And the third one is what I call shock to loyalty. And again, some of this is driven by the disruption in supply chains that we saw, right? Where a lot of brands and products were not available when and where we needed them. So customers started to shift towards other brands. But you're now increasingly seeing a behavior towards more value and convenience versus loyalty, right? And in the consumer world, habits typically get formed in 6 weeks, right? So the longer this stays on, the more sticky it'll become, right? So those are the two, three trends that I wanted to tee off: flight to digital, shift towards value and essentials, and then finally just the loyalty and the brand perceptions also getting a new meaning in this world, right? And then finally, if you take a step back, right, there's no other way to explain the pandemic but to explain this is a massive human tragedy. But at the same time, being an optimist and being constructive about it, this will also be a catalyst and a force towards a real change, right? And I almost kind of put this as a massive forced global experiment that we're all going through. And this will drive change in ways that we've never really seen before. And there's enough rhetoric that is out there, right, which is decades of change happening in days and so on and so forth. And we will not go there. But what we're really seeing on the ground, if you look at those three trends, is trials and usage like never before. Things and they're trying things in different patterns, which will drive real change, right? So if a student in Patna today has accessed a really interesting music class from a teacher in Mumbai, he or she will not go back to their own teacher, right? So that's what the impact of trials and usage is. And my hope is a lot of this trial and usage leads to real change as we open up and as we go back to normalcy, if you will. So with that long opening, I will bring our panelists in. And let me go back to my three themes and we'll anchor the discussion in those. Let me start with the first one, which is the shift in consumer behavior. And I kind of teed up some thoughts, but I'd love to hear from our panelists. And I'll start with Tasneem. Tasneem, if I go back to Tasneem, and I think just from your vantage point, Tasneem, at Visa, where it's incredible to see how you are building a payments network to connect the whole world. What are the big shifts that you're really seeing, and which ones do you think will really stick versus?
Thanks, Puneet, and it's a real pleasure being here and an honor to be on this panel with my fellow panelists. I think at Visa as a network, we work across various players, right? So banks, merchants, fintechs, consumers, other ecosystem players. And as that entity kind of sitting in the middle, I'll speak of trends that we're seeing across the board. One of the first things I think that kind of resonates with what you said before is that with consumers, financial health seems to be trumping physical health. If you look at the data from Visa, about 6 in 10 AP consumers, especially in developing economies, are saying that the pandemic has already impacted their household incomes. And about 4 in 10 of them are already working at reduced salaries or unemployed. So consequently, you're seeing really pragmatic consumers and shifting purchase behavior. So to your point earlier, price sensitivity is top of mind, and consumers seem to be avoiding non-essential spend for the foreseeable future. So that's one clear trend that we're seeing. The other one is the movement towards digital apps and digital commerce. So consumers are spending more time on social media. Weekly time spent in apps has grown 20% year on year. iOS and Google Play spend has grown 5% year on year. So we're seeing that real shift in both app usage as well as digital commerce. And from a payments perspective as well, there seems to be several shifts in behavior. So one is obviously you said the contentious point around whether cash is truly dead or not. So there's obviously a shift to digital payments. There's also a preference for touchless, right? So given the pandemic, tapping to pay to minimize contact with terminals or preferring authentication that does not require too much contact, we're also seeing that. We're also seeing a shift to e-commerce transactions in our data, and also differences in category consumption, right? So home, fitness, online entertainment, essential categories have seen kind of a lift in the last few months. And lastly, the last point that I touch on is new ways of moving money. So consumers seem to be leveraging P2P way more to send money to families and friends. And in the last 3 months of 2020, we've seen our products powering 90% more P2P transactions than ever before. To your point around what do we see lasting, I think only time will tell. But new habits take on average 60 days to form. And the pandemic has been here for way more than that. So I would say many of these habits are here to stay in the mid to long term. What could be impermanent is that category consumption shift that we saw in the early part of the year. I think we've started to see that soften and stabilize as many AP markets open up. So out-of-home consumption will probably increase over the next few months. But otherwise, I think many of the trends are here to stay, at least in the mid to long term.
Thank you, Tasneem. You said 60 days, I said 6 weeks. We roughly ball points. I think the longer this stays, the stickier these habits will become. Let me pull you in, Lizzie. And it's exciting to see what you're building at Zest, right? It's the largest and the fastest growing consumer lending fintech company in the country. And what are you really seeing in terms of consumer behavior? What is really changing and what's going to stick?
Yes, no, I want to pick up on some of the points that that Tasneem made, and you did so eloquently. But we have a unique vantage point. We sit here afford the things that they really want and really need right now. So we have a very good understanding of what is now considered an essential service versus what would have been in, say, February. And I think that's what's really interesting about the definition of what is essential and non-essential in the eyes of specifically the Indian consumer has really shifted. The obvious things I won't go into, but some of the really interesting ones we've seen, massive boom in edtech, right? Not surprisingly, that is not now a nice to have or luxury product. For many, many households and individuals, doing an online course or providing online test prep is frankly the only way to get access to that. So we are seeing really, really exciting trends in categories like that. Another one related, interestingly, is laptops. We've seen a boom in affordable laptop purchases. Now, to your point, you could say, or maybe that's pent-up demand, but it's been consistent over the last 6 weeks. And we think it reflects the fact that that is now an essential item in every household. And remember that we're still in single-digit levels of penetration in terms of household ownership of products like laptops. So there's a huge way to go for folks like Amazon to participate in that growth story, and we're there to enable it. But I think the other thing that's interesting that you didn't bring out at the beginning, but a trend that we are really strongly witnessing in the affordability space, and I'm sure others, maybe actually in the insurance space as well, is linked to this focus on essential items and I guess frugality, to use the word, which I love. There is also a real awareness right now amongst consumers of their financial health, and in a way that was so difficult to do before. And our customers are the very typical, you know, we sometimes call them, I want what I want and I want it now generation, right? They're very, very focused on consumption, enjoying life. You could call them millennial, but I hate that word, and they're across all age groups. But they really want that instant gratification. And so having a conversation about insurance or about, you know, long-term financial health was always very challenging. Suddenly that's a very easy conversation, and the type of content that they're consuming and the interest that they're taking in financial planning, financial health, is phenomenal. And related to that, we have seen a boom in demand for insurance, which might be a nice segue to Varun, and even people looking for financing for insurance, meaning they're buying a policy or a product that is so all-encompassing and expensive. And again, remember in India, we're at sort of 3% penetration of these large general insurance plans, and they need financing to do that. Now, that never would have been a typical behavior at the beginning of the year, someone taking out a loan to afford an insurance policy, but we're seeing huge demand in that space. So those are just a couple of the observations from our side of the world.
Thank you, Lizzie. I love what you said, right? This is really counterintuitive. This I want it now generation being a lot more financially aware and conscious and being a lot more mindful and frugal is something that didn't come to me, but it's a really interesting trend. Thank you for calling that out. And I think you teed up Varun really well. So Varun, I'm gonna switch gears to trend number 2 or theme number 2 around how are fintechs really responding, and It's really interesting to see Apple's journey, right? How you're breaking the drab and the mold of a general insurance company to build India's first digital insurer. What are you seeing just from your vantage point around fintechs and how they're responding to this?
Well, thank you for having me over, and it's just a lot of topics to cover. But I think let me start out by saying that the last 3 months has probably been the biggest learning, and in terms of how consumers are responding, it's been absolutely crazy in terms of us responding to how customers are responding. I'll just give you a bunch of examples, and April, we're a large car insurance player. I think that's been our primary product. And in April, everybody was sitting at home and nobody was using their cars. And suddenly there was just no demand. It just died because people sort of started procrastinating it, maybe. But as people realized, I think as consumers realized that this is here to stay, and they sort of started getting back to normal, we suddenly saw a huge influx because the entire agent, broker, physical infrastructure of insurance just died. We did some math, and in about a month's time, every potential car that was available in Bangalore for renewal, 40% of them landed up onto our website. In that particular month, which was never the case. I don't think any amount of advertising or any amount of push could have solved it. So it's just been quite chaotic, and because these trends have been just going, just too volatile right now, and we're seeing some numbers just pop up and down very crazily. And to what Lizzie was saying, health is it's suddenly, for lack of better words, talk of the town. It's just I don't think as much of public awareness that governments could have created or government schemes on health that could have been launched. Nothing has probably educated the Indian public at scale as much as this pandemic has. And you have 25-year-olds lining up for insurance. The regulator made a corona product and a general, basic health insurance, which includes corona, sort of mandatory for all insurance companies to offer. Before we could even bring that product and put it on our website, we had 5,000 queries a day. People just emailing in. There's no product website, no listing. It's just been absolutely insane. I don't think we've been able to cater to it very well because it's just happening too quickly. But I think it's absolutely right that there's just been a tremendous shift. Personally, the way I look at it is that I hope this kind of awareness stays and it's not just shock reactions. And then as we human beings, while we've been talking, it takes 6 weeks or 60 days to build a habit. We're also quite adept at getting back to normal once the bars open up and and life goes back to normal. So I would bet I'm not so sure where it could go either way. But to talk from a business perspective, I think it's been also relatively hard. I also think in terms of, to answer your specific question as to how do fintechs respond, I think in today's time we should sort of look at fintechs with probably a different lens. If you're in the payments business, it's great. If you're lending from your own balance sheet, it's complicated. At this point, we as insurance, we had to take care of in terms of our there's let me give you a specific example. Job loss coverage was the most profitable product on insurance. And what used to be this add-on that was bundled with every insurance product, saying, hey, you have job loss coverage, because nobody really imagined, mass layoffs, and suddenly it's become a balance sheet drag on a couple of places. So I think something suddenly doing well, something suddenly not doing well. But if you're a balance sheet player, I think you've got a lot to watch out for, even if you're sitting on the happy side of things. So that's how I'd probably end that.
Thank you, Varun. You're right. I mean, it takes the same amount of time to develop both good and bad habits, right? And also forget the good habits that you have developed. So I think we have to be conscious of that. Joel, thank you for being patient throughout this. But let me kind of bring you in now, right? And you've been at PayPal, you've been at Grab, you're now at Rapid, and you're disrupting finance in your own way, right? With fintech as a service. And it's really interesting what you guys are doing at Rapid. So just from your vantage point, what is the response that you've seen, and what's working, what's not?
Yeah, I would say, across the category, and not to be glib about it, right, but never wasted the pandemic. Everything about electronic payments that people have been working on for a decade for sure has accelerated across the board. I would say there's a few things that we see, right? Within our peer set, within the fintech community, I think we see a lot more awareness of using their capital efficiently, using their team efficiently. I think the openness to partner and to close deals and move things forward much more quickly than we've seen in the last couple of years, I think is there. To some degree, I think it's because people aren't traveling, right? So a lot of the barriers to discussion are actually out of the way. But we do see a tremendous amount of partnership happening right now. I think from a consumer spend standpoint, and Tasneem touched on it a little bit when she mentioned the P2P growth, but when you look at the growth of real-time payment systems, whether it's UPI or PayNow or any of the RTP systems that we see across the board, one of the interesting things is that the payment conversion rate is actually higher than we see for cards or e-wallets. What that means, I think, is that the number of consumers that are actually paying with real-time payments has skyrocketed. They went from unfamiliar to extremely familiar in a very short period of time, whether it was 6 weeks or 2 months, and they're now habituated to paying that way. One of the things, other than Singapore, one of the things we see in Singapore is a huge awareness of PayNow from an affordability standpoint, as merchants are really saying, look, we are strapped. Anything you can do to lower our costs and help us serve you and stay in business, please do that. I think people are willing to deal with a little bit of extra friction in order to be communitarian in terms of the affordability of what they're doing and who they're buying from, which I think touches a little bit on what you said in terms of expanding the reach of who they're buying from. They're not buying just from big platforms. People are consciously seeking out a much broader range of suppliers and a broader range of goods, and to a large extent, goods that are actually sourced locally, and they're trying to support their local community. And I think the third thing, which is purely relates to us, is historically we have been very focused on larger enterprise, et cetera, and we've really shifted our roadmap in the last few months to focus on channel, on self-service, and we've actually given ourselves the goal so that when someone signs up with an account, within 3 or 4 weeks from today, they should be able to transact within 2 minutes, right? And really take away even this technology barrier to entry that we have been, by design, kind of living with, and eliminate it for as many merchants as possible. Because what we're really seeing is this explosion of people that everyone has said that have to digitalize and digitalize very quickly. And they don't necessarily have engineers sitting around. They may not be familiar with lots of other platforms, et cetera. They just have to go online for their livelihood. And anything we can do to make that simpler for people, we view as very essential. So I think those are the three big things that we see.
Thank you, Joel. It's really interesting. I think the way you describe this, right, the way fintechs are pivoting either in terms of products or the channels they reach their customers through, or even reducing the friction in the process, right? It's just been incredible to see this from the outside. But thank you for that, Joel. Let's move to our third theme, right, which is a little bit of crystal ball gazing and looking ahead and not backwards, right? And the question that I'll pose, and I'll open this up to all four of you, right? Is if you really think ahead and if you forward the clock up a little bit, right? What does the future of fintech look like? And as some of you rightly said, right, fintech is a really broad term, and payments is very different from insurance versus banking and so on and so forth, right? But if you were to imagine a world in the next few months and few years, what would that world look like for fintechs? Lizzie, I'm going to pick on you then. Go for it.
Oh, go for it. Well, I hope that the future of fintech is death of phygital. One of my pet peeves in life is that word, because it was always such a get out. So we would meet with banks and institutions, let's say, who would exclaim that they were really excited about digital and fintech and digital lending. And then it turned out what they meant by that was having a website or an app or working with a digital acquisition channel, but everything behind the scenes could still be completely physical, right? So there would still be a guy that would turn up at your house one day with some paperwork. And if you needed to, say, close a loan or reschedule, it would be 2 weeks of paperwork and manual processing. And what we had believed from day one was that digital and fintech, therefore, is about end-to-end digital and genuine automation to create those replicable scalable services that you just can't do in the physical world. And I think what's happened in the last few weeks is the penny has dropped. And finally, everybody gets it, because even, call centers were not working in March, right? Just the most basic things that we thought were sort of digital just were not operational. And so we've had many, many very exciting calls in the last few days and weeks with big banks, global banks, domestic banks, NBFCs, who have all said, we finally get it. We need end-to-end automation. We want a genuinely digital experience, including servicing, including collections, which nobody used to talk about in our space, digital collections. How can we do it? So that's my second point and my second prediction, which is that finally in India, we will see banks and fintechs collaborating a lot more. And I think that's the way it should be. Fintechs should be good at tech. They should be good at product. They should be good at automation. Banks should be really good at capital and regulation. And I think finally we'll bring those two spheres together and see that kind of, Amazon vision spurred by great infrastructure that the likes of NPCI are helping us with. So I'm really excited. I think we've got much more potential in India because of this timing and this coming together of the fin and the tech. There are many other markets where you haven't really fulfilled the potential of fintech yet. I think India will be the biggest fintech market in 5 years. That's my prediction.
Thank you, Lizzie. I couldn't agree more with you, right? I think just the bluff is being called out, as you said, right? There are lots of companies, and I've seen this in the last many, many years, right, who had what I used to call post-it digital roadmaps, right? All they had was post-its in their office, and with a bit of a digital roadmap over years, and those bluffs are now being called out, right? You're either digital or you're not, right? And I think it's become a question of survival. So thank you for that. Joel, your views?
I mean, very tough act to follow, but let me just add on, because I certainly agree with everything that Lizzie said. And I think it goes beyond end-to-end automation of the processes as we think about them today. When you think about the size of some of these markets, right, the remittance market is 600 billion, right? E-commerce is basically 3 trillion outside of China. Offline retail is something just north of 20 trillion, right? The rest of the world, $150 trillion, right? And most of it is extremely manual, whether you're logging into your bank website or not. It's still basically a manual process. LCs, LGs, the entire value chain is so broken across so many experiences. I think what we're really going to see, particularly now that we've all proven we can work from home, is that this entire value chain can be fully automated end-to-end, right? With payments built into the core. I mean, one of the B2C or whatever they are, B2B, supply chain providers we talk about the 22 different hands it has to go to when they make a t-shirt over here and they sell a t-shirt over there. That money moves hands 22 different times. And most of those steps are nothing like digitalized in any meaningful way. As we move into this platform-enabled world, and I think Lizzie 100% is correct to point out the great work the NPCI has done to really lead the way with RTP and how these systems start to come together, the ability to credit money, debit money, collapse the credit value chain, to be honest, eliminate factoring as a business in a lot of cases, and really accelerate money across the supply chain is an almost unbelievably large opportunity because of where we're just about to be in the payments space, right? Which leads me to another aspect of that trend, which is everyone's in payments, right? And it's very much a truism, and you mentioned, of course, I worked at Grab before, but anyone that owns an ecosystem of any scale or any size is going to have to be in the payment intermediation space in some way, shape, or form, right? They have to understand who their customers are, how they're getting paid, how they return money, how they deliver value, and they're going to have to meet an extremely high bar when they do it, because consumers and businesses will be very familiar with real-time payments as part of the ecosystem, right? So how does everyone get there? Well, third trend, of course, is that payment as a service platforms or fintech as a service platforms are going to be increasingly important, right? Because every company in the entire world can't rebuild all the payment infrastructure around them by plugging into everybody they've ever heard of, right? So you will see increasing importance to platforms and platforms that provide a lot of scale, both when you're collecting money and when you're dispersing money, to make your ecosystem work and to make your ecosystem work at a faster and faster pace globally.
Varun, over to you.
I could agree couldn't agree more with Lizzie with one of the things that you said, the word phygital, and I have another pet peeve, which is the chief digital officer. I don't know what that means. Anyway, having said that, at least from, so we're in a slightly different kind of business. And at least we've struggled all this while, with enough naysayers to say that insurance too complicated. Maybe 5% of the market will be online. Maybe at best 10. That's about it. So is it like a niche play? It's a nice to have thing. I'm not saying this is as far back out 3-4 years ago. This is as back 6 months ago. These are still conversations as of 6 months ago. What we're seeing is this sudden shift, and consumers behaving very differently, and the ecosystem players around maybe a product like insurance also starting to behave very differently. So for a product like auto insurance, customers are completely finishing their claim journeys online. There's nobody to talk to, and they're okay to do it. We've had a little bit of struggle internally to get to this point where you don't need somebody to talk to at the point of actually getting even your car claim done. Customers are okay to accept cash settlements based on videos that they've shot themselves of the damages to their cars. So I think it's just completely changing, and there are lots of new things that will need to be done, and maybe some of them in the medium term. The only way to underwrite a product like health insurance was to of a certain value or beyond, was to ask you to come for a medical test, and in just nobody wants to go and get a medical test done at this point. Nobody wants to step out and be anywhere near a clinic or a hospital if they don't have to. And how do you underwrite? There's this. So I think surrogate information. I don't know. There's some way of digitally collecting medical records or something else needs to happen. I think everyone's now suddenly racking their brains because the easiest thing to do was, hey, here's your appointment, go get a test. That's not happening anymore. So I think the way we underwrite customers, the way hospitals are now reacting to claims fulfillment, we've been Aqua as a company has been talking to hospitals about integrating their billing systems with us since the time we've been incepted. Not an inch is moved. Now when the bill processing workers are not there, they suddenly want to integrate, because the cash flows are stuck somewhere. So I think when you look at the ecosystem, when you look at how we'll have to respond differently to underwriting, I think lots is going to change. I'm hoping that the ecosystem needs to come into play, at least for a product like ours, where the other participants also don't forget about this Phillips that we've got, if I can call it that. But I think lots is going to change, and we're also going to have to change how we underwrite. Last point I'd make is even something as basic as car insurance. How do you underwrite that? The biggest use case of going to office and home was your car usage. The frequency of accidents, which is the pricing, the core of the pricing, has just gone out of the window, because the primary use case of car usage is dropped by 60-70%. At least we don't know whether that will continue, whether a lot of people will work from home for a very long time. So it's just the whole pricing model has changed. So lots of changes. I don't think I can crystal ball perfectly, but I think brace for change is what I can say in a big way.
Thank you, Varun. I'm going to start mixing some questions. The scenes. I'm just going to request you to hold on for a minute. There was a question specifically to you, Varun, which is: do you think bank customers would switch to fintech firms after COVID if their primary financial provider fails to deliver the customer experience they expect?
I think that. Sorry, is this for me?
Yeah, this was for you, Varun. This was to you.
Yeah, I think that's already happening because to some degree, companies who had invested in end-to-end automation or players like us who did not start with any legacy thought process, we're ground up designed that way. And we've seen in this time of complete lockdowns, like Lizzie mentioned, call center staff also not being there for a little while, your ops people not being there for a little while. Some of the traditional companies have really struggled to even give basic responses to their customers. They've managed to pull it back up. I'll say something specific. There are companies which I wouldn't name who still beyond a certain level in the hierarchy. If you're in the company, you don't have email access at home. You get only email access at home if you're a level above. And the guys who are actually processing customer stuff are actually those guys who suddenly had to build out 3 weeks of VPNs and figure some stuff out even to respond to customers. So if you get stuck in that situation as a customer who probably needs your health insurance money right now, or who needs your car fixed right now, it's a horrible place to be. So from that perspective, I think companies will somehow manage to surmount this. If they don't, I think customers will shift to new age experiences very quickly. They'll really realize that the response is just not possible.
Thank you for that, Varun. Tasteen, over to you. There's also a specific question to you, which is related to the question is, how do you think new consumer behavior will transform the fintech industry? What do you, Tasteen?
Sorry, you cut out a little bit there, but I think you said, how do you think consumer behavior will evolve the fintech industry?
That's right. There's a specific question to you from the audience.
Got it. So I think what Joel said earlier was correct in that the pandemic is accelerating a lot of the trends that we observed before. And the fintechs who can tap into these opportunities can obviously stand to benefit. I think there are three areas in particular that I'd like to highlight. One is we already saw the trend of helping to get the unbanked, particularly in high cash, low bank markets, equipped with digital payment methods. So that was already an ongoing kind of trend, and we're seeing that accelerate. And so we are seeing more and more fintechs providing a variety of flexible credit solutions, right? Whether it be short-term loans, installments, buy now, pay later, and so on. We're also seeing, and I think this was discussed in one of the halls yesterday, experimentation with mobile payments that don't require good data connectivity, or even through basic phones and even without phones. So fintechs that are trying out these kind of solutions, we'll see more and more of. The other point, the second point that I want to make is around helping long-tail merchants, small businesses accept digital payments easily. So essentially, we've seen this trend of going from offline to online during the pandemic. So building an online presence and accepting digital payments through payment gateways, companies like Stripe and Shopify, for example, have done exceptionally well during the pandemic. We're also seeing a lot of fintechs helping small businesses learn how to build an online presence. So Visa's done some work, for example, with Gojek in Indonesia, and with particular fintechs in Thailand to help SMEs accept digital payments on social media platforms. We're also going to see fintechs that pilot low-cost digital acceptance solutions that enable the merchant's mobile phone to accept payments as well. So those are some of the merchant side trends that I expect fintechs to kind of tap into. And finally, there's the area of business-to-business payment, right? With the environment shifting as it is and with suppliers looking to minimize cash transactions, streamlining vendor payments with the use of virtual cards or virtual payment methods. Things like companies like AirWallex, for example, are doing really more defined. Simplifying payroll as well is going to be really important. And the other area that I'd like to highlight is just around gig economy workers. So empowering gig economy workers for faster and immediate payouts, providing features such as advances against unpaid invoices, even enabling them to find gig jobs and so on. So I think those are the three kind of areas across consumers, merchants, and businesses that that fintechs are going to take advantage of in the next few months or so.
Thank you, Tasteen. I think we have a couple of minutes. I have one interesting question, Joel, and I'll put you on the spot, right? The question is, post-pandemic, will the contactless method ignite a cashless payment surge?
I think there's no doubt, right? I think there's no doubt. I think it's really hard to see the public thirsting for cash when realistically it might be several years before handling a bunch of stuff that you don't consider safe or coming from your own pocket is something you want to do. So I think the awareness level, our 60-day target, is going to be super high. People are very comfortable shopping in O2O experiences, just exactly as Tasteen mentioned. And they're familiar, right? As I said, they're very familiar with RTP at this point. So yeah, I think it's hard to picture. I mean, obviously lots of things will rubber band backwards, but it's very hard to picture cash being the one that leaps to the forefront when people don't feel safe doing it. I think when you look back at the last 20 years or so, and I've been doing this for a little while, there have been some really big inflection points, right? The price of broadband around the world, the price of PCs, the existence of smartphones, cheap 4G, et cetera. I would argue the next inflection point quite easily could be the fact that everybody knows how to work from home, and we have this tremendous adoption of SaaS platforms for a whole range of activities. Once you've done that, people's expectations to go backwards are probably not going to be there. It's probably not going to be a transformation nirvana, But definitely it's going to be very, very different than it was 3 months ago.
Thank you, Joel. As you rightly said, right, really hope people will not move backward and some of this change will actually stick. I know we're just about time, so I just wanted to thank Tasneen, Lizzie, Joel, Varun, and to all the people who are listening in. It's been a pleasure hosting all of you, and I've learned a ton. And I hope we've given all of you something to kind of think about and something to reflect on. Thank you once again on behalf of the panel. Stay safe and take care. Over to you, Garima.
Thank you so much, Mr. Tandok. Thank you to all our speakers for this awesome session. I would like to take this opportunity to thank our valued partners, National Payments Corporation of India, Amazon Pay, WhatsApp, Google Pay, and Visa. We will now take a small break and return back for our next exciting session. I would request all the panelists and attendees to please visit our exhibition space where we have over 70 exhibitors to check out some really awesome offerings. You can gain some points and win some really exciting prizes. Stay tuned with us. Thank you so much, speakers. Thank you, everyone.